Hi everyone, welcome to today's very special episode of The Pitch with Mr. Stingy. And with me today, I have a very special guest who is Mr. Lee of Dividend Magic. Lee, you want to say hi to everyone?
Hi, everybody.
So, Dividend Magic is one of the most legendary or even one of the most famous Malaysian investors in the personal finance space. He's very famous for his blog, which is Dividend Magic. So that is dividendmagic.com.my if you haven't seen it before. Lee has accumulated a portfolio of more than 500,000 ringgit in his just few years of investing. So I've always found that very impressive. Apart from that, he's also a licensed financial planner with FPAM, which is the Financial Planning Association of Malaysia. And he is here today with us. Very happy to have you here, Lee.
Yep. Happy to be here. Thanks for having me.
Awesome. You've been in the space for a pretty long time, and people haven't really seen you before. So the first question, of course, is why the reveal and why now?
Okay, this goes back a little bit. Like I actually revealed sort of my identity through The Edge already. Because to be published on The Edge, I had to give out my name and my photograph. There's two reasons for the reveal. One is I'm actually doing a YouTube video, so to do that properly, I have to show my face. And why I'm doing the YouTube is because I want to show people how to value stocks. So instead of writing a 1,000, 2,000 word article on each individual stock, I prefer to go the video route where I talk maybe 30 minutes to an hour. And then, videos should be easier for people to understand instead of reading articles every single time I value an individual stock. So the second reason is because, as mentioned earlier, the age. So I actually received some negative kind of feedback or messages from certain readers. I mean, it's just a small percentage of readers that have actually found me through the article. They know my name, they know how I look like. So there's one in particular which I remember where he actually sort of threatened to reveal my identity. And then, instead of caving into it, I actually, figured that revealing myself would be better moving forward.
And why do you think this guy threatened you to reveal? It sounds like, is he like a disturbed individual or is he just jealous? Do you know?
It started off with a clash of opinions in the sense that he has his own investing method. Mine is, from what he can see, he thinks I'm just investing in dividends for dividends' sake, which I'm not. I think I tried to have a discussion with him to actually tell him why I invest, how I invest. But I think he's bent on his own view that his investing strategy is better than everyone else's. So there was no room for talk or discussion. It started off with a clash of opinions, and he wanted me to try his way, which I'm not saying his is right or mine is right or his is wrong, but I have my way, he has his way. Let's leave it at that. But
certainly sounds like a bit of a strange individual.
Yeah, very strange. Yeah.
So you mentioned your YouTube channel, and this is very exciting because I think so many people over the years have so many questions about how you value stocks and stuff. Is the title of the YouTube channel going to be Dividend Magic as well?
Yes. Yep, it's going to be Dividend Magic. We haven't really come up with a name yet, but as soon as we do, we'll just I'll post it up. Yeah.
Right. So can you tell us if you already have any video content on your YouTube channel up?
Yep. Right now there's two videos. The first one I did was on how to invest in the US via eToro. The second, more recent one is on that's the first episode. It's on my investment goals and strategies, basically. So that one I'm doing with a friend. His name is Wilson. So we moving forward, we're going to do more videos on valuation of actually in individual stocks, both local and international, more on the US side.
Cool. Yeah. So if you've been following Mr. Dividend Magic for a while now, please make sure to check out his YouTube channel. I'm so excited
you.
for that
Yep.
myself. But before we go on into today's session, can you tell us a little bit about yourself and where did the whole concept of Dividend Magic came from? What's the story behind all this?
Okay. How it all started when, because I wanted to actually keep track of my investments. I wanted to keep myself accountable. So I had, I did it online where it's publicly available to everyone. Of course, at the start, nobody was actually reading the blog.
Okay.
And then I was quite active in, I think, Lao Yat forums the last time. Yeah, that's where it all started. Lao Yat, I shared, I asked a lot of opinions. I asked people for help because I was still relatively new in investing. So Lao Yat, blog, keeping myself accountable. That's how it all started.
Right. And you've been doing this for 4 years now? Is it 5 years?
Yeah, I think 2014 or 2015 is when I actually started.
And what would you say to all the followers and fans that you've accumulated over these years? Because you've never sort of revealed your
Yeah.
identity, so there must be something that you've had inside that you just want to share with everyone who's followed you so far.
I wouldn't call them followers, first of all. More, I treat them more of like we are part of a community. Like,
It's nice.
yeah, so everyone, I think most of them like investing and they like saving money, I would think. So, but investing is the main point. So, what I like to say to everyone, actually, I'm just thankful that everyone has been supportive along the way. Of course, with the exception of the few negative
Right.
people I had. Of course, as I go on, I learn how to deal with stuff like that. So thank you to those who has been following, and yeah, I'll remain transparent. I'll continue to be sharing, regardless of whether it's a loss or a gain for my portfolio. I'll still share it out as usual.
Nice. And you are probably most famous for your Freedom Fund portfolio, which actually that was the first thing that really attracted my attention as well.
Okay. Yeah.
Yeah. But before we get into a bit more of the investing topics, let's talk a little bit about FIRE, which is Financial Independence, Retire Early.
Yep.
You are famously vocal about FIRE, and I think a lot of people see you as a figurehead or one of the leading members.
Yeah. Okay. FIRE. I wouldn't call myself a figurehead, but I'm pretty vocal about it because I want Malaysians to actually start saving and of course investing, because not only to retire early but to retire at all. Basically, you have to have enough money. So EPF hasn't been enough. I think it won't be enough ever. And now with the government allowing withdrawals and all, I'm not saying that it's right or not right. Some people do need the money, but yeah, I think to supplement the EPF, we have to invest and we have to have other sources of income when we eventually retire.
Yep. And in your own journey, you've said that you want to get to the level of 36,000 per year passive income. How is that journey going so far?
Okay, my form of passive income is through dividends. So far, last year, I think I got about 16,000. This year, not been doing so well, the portfolio, with the economic downturn, I would say right now. Banks have stopped. I think the last round they didn't give dividends. So my portfolio has been hit as well. Right now, I think at the last count, I think was about 14,000. So hopefully I can reach the same as last year, 16,000. Yeah, I'll be happy with that. So I'm halfway there to 36,000 basically. Yeah.
And is there an age that you target to to FIRE by that age?
In terms of FIRE, I would prefer half of it, where I want to just achieve financial independence.
Mm-hmm.
Retiring early has not actually crossed my mind right now, but eventually I'm sure, whether early or late, it doesn't matter. As long as I'm independent, I think I can just do what I want, work in the job I like and all. That's my concept of FIRE.
Right. Nice. So it's a bit more on the financial independence apart
Correct.
from
Yeah.
and I like that because I myself I don't think I will ever retire. I mean, if I can, I would like to work on stuff that I believe in
Okay.
for a really long time. Just want to know your thoughts on frugality. Several people have asked me when I said that you were coming on the show. Several people have asked me about your thoughts on frugality, and the first question is from Sherry Lin, and she has asked this: a number of people see frugality as deprivation, pitiful, or shameful. How can we encourage people to embrace this mind shift and not to see that frugality is like really suffering?
Okay, I wouldn't say frugality is uncool or suffering in any way, because that's how I was brought up. That's how I am. So if you feel that you aren't a frugal person, I would say to you, don't force it, because if you're miserable doing, saving a lot and skimping on meals and stuff like that, I don't think you will be able to be frugal in the long run. So just stay true to yourself. If you are not frugal, I would say probably just budget a little bit. Try to save even though you're not frugal, but you don't have to be, get a 50% or 80% savings rate to, eventually be rich or anything like that.
Cool. And I follow your Instagram pretty closely
Okay.
because obviously we're friends. And I know that even though you have this, some people think that you have this reputation for being frugal, but I also know that you live well. I know that you enjoy like
Yeah.
nice steaks and nice drinks. And then we've had conversations about nice watches.
Yeah.
So I do know that there are certain things that you enjoy, and then there's certain things that you skimp on.
Yeah.
Would you say that you purposely balance? There's a way or method on how you balance this?
Yeah, I'm perfectly fine having cheaper meals every other day, and then maybe once or twice or a few times a year I would splurge lah, I would say. Like, I like my steaks, I like my meat. I think being frugal actually lets me appreciate and then enjoy when I eventually have better meals. Yeah.
Right. Nice. I like that because it's a bit of like, I mean, I call it optimization because you are sort of saving a bit on certain things, but then you splurge on things that you really like.
Yeah.
So related to this concept, Suzanne Tan asked this question. I think it's a really good one. She said, when you're being frugal, how do you resist the temptation to buy unnecessary things? Sometimes I wait for a few days and I still want it. Do you have any tips for managing this desire?
Okay, I think the way that Suzanne manages it is pretty good. That's how I do it as well. But instead of a day or a few days, I actually wait a week or more. So this would be for my wants. If I really want something, like for example that Iron Man figurine, or if I want it, I'll wait. If I still want it in maybe after 2 weeks, I'll get it. But provided that it's within budget. So budgeting is important to manage your wants, so you don't go crazy and splurge on unnecessary things, and at the end of the month you feel you don't have enough to even eat or anything, and you have to eat into your assets or your savings, which is no lah, basically this one.
Yeah. Would you say that you are a strong proponent of having that play percentage in your budget? So meaning that For example, some people have 10% or 15%, which is purely just for play and doing whatever they want. Do you think that this is a good strategy for people to have?
Yes, I think it's necessary for a lot of people to keep them at it, keep them at the budget. But on the other hand, if you have that kind of 10% for play, I would say if it were me, I wouldn't have the mindset where I would have to use up all of it, at the end of the month. If I have some leftover, fine, I'll be happy with the leftover. Instead of, okay, I must use this 10% every month.
Okay, cool.
I think that mindset is important.
Yeah. So a bit of a cheeky question from somebody. This is from YKit. And again, feel free to answer or not answer depending on how okay you are. YKit was asking, how does your girlfriend accept you for your frugality?
Okay. I, even though I'm revealing my face, my identity right now, but I wouldn't want to go in too personal into girlfriends or not, or lack thereof. But if I were to have a girlfriend, I would say communication is important, between partners. So first, let her know that what goals you have. Why are you saving? Start a discussion, and even though if she feels, she doesn't feel the same. Like she thinks some people do think that money is meant to be spent instead of to save and invest. That's her view. She's not wrong. So, but you have your view as well, and that's not wrong. So compromise and then try to, yeah. If you have to eat out less, you already communicated, and she should understand why you're eating out less nowadays.
Yeah. I think this is something that, because I recently got married end of last year, this is something that the marriage counselors taught us as well, that everything starts with communication, right? And as long as you have an understanding. So yeah, I think whoever is Mrs. Dividend Magic will be lucky someday, definitely. So moving on to a very big topic of interest, I think, for a lot of people, which is the topic of investing. And even myself, I started following you because I was so intrigued about your investing. I like to think, or as far as I can remember, you were the first guy that was so open about his portfolio, about all your amounts that you had. And I guess just to start, what would you say is your basic philosophy to investing?
Okay. Philosophy, I think there's a misconception out there where people think I invest purely for dividends, which I'm here actually to say that that's not the case. If you look carefully, my portfolio actually is not 100% for dividends. I invest in companies that I would hope that they will grow in the future. So in growing, they will grow their profits. Their profits will lead to more dividends. So increasing dividends. The dividends are there to serve the purpose of my earlier mentioned 36,000 in passive income. So that's the dividend part of it. But the companies have to be growing as well.
Right, I see. So just because your name is Dividend Magic doesn't mean that you're all
Correct.
about.
I would say I'm more of a growth kind of growth investor.
Right, I see. And I know that in your portfolio you have, I think, more than 20 stocks. Is that correct?
Yeah, I can't remember offhand, but it's around there, 20 plus.
So do you have a system for keeping track of the stock? Because one of the questions that some readers were asking is, how do you manage so many? It's a lot for some people.
Okay, yeah. My method of recording is really simple. It's an Excel sheet, a spreadsheet. But a lot of people have asked me to share. I can't do that because I don't think they'd be able to understand it. So I've yet to take the time to sit down and actually make it a little more simple. I will do that in the future, I think, because it might help a lot of people. But it's just simple recording. So every time I receive dividends, I'll just record it there. And then I have a percentage to show the yield, which is what's important to me. Yeah, it's basic. It's nothing special. I don't have a special app or anything to do this.
Right. If you don't mind me asking, Lee, when you were in university, did you specifically study something related to finance?
Oh, yes, I actually did. So one of the subjects I had was portfolio management,
Okay.
if I remember correctly, and also risk management. So these two subjects helped me a lot. It actually got me into this path lah, investing path. Yeah.
I see. Yeah, the reason why I asked is because I think doing spreadsheets may come quite naturally to someone like you, and it in some ways it is quite natural for someone like me. But I've also realized that a lot of people may be a bit scared.
Yeah.
I mean
I get what you
they're
mean.
not used to spreadsheets.
Yeah.
So yeah.
You still have to do it because that's the best way to keep track of your investments. I think it's all numbers.
Mm-hmm.
Or you could start a blog probably.
Right.
Yeah. But it's still numbers. At the end of the day, if you like me, you want to show your numbers, spreadsheets are the only way to go. lah.
Right.
Yeah.
Right. So even if it's uncomfortable, people have to take that step,
Yeah.
right? Cool. So another question that came in through the readers was from Danny, and he's asking, how do you decide in terms of percentages of your portfolio? And if you don't mind sharing, what kind of portfolio do you have right now?
In terms of the overall,
Yes.
more than stocks and everything.
Yeah. For example, stocks, cash, unit trusts.
Okay, so stocks, I have I'm 60-70% in stocks. Cryptocurrency, yeah.
Nice.
I have about 1 to 2%, I think, right now. And I'm trying to get to probably maximum 5%. And then the rest of it will be in cash. So I'm actually holding on to cash right now, to see how the economy goes, whether I can find any bargains in the future.
Right. And is there any specific reason why you chose to have, say, 60 to 70% in stocks and the rest in cash?
No particular reason, but I'm more into stocks because I'm only 30 years old right now. So equities have in my opinion, larger potential to grow at a faster pace. I have more time, longer time horizon ahead of me. So majority of it will be in stocks.
Cool. And so predominantly the audience is Malaysian.
Yep.
And well, I think for both of us.
Yep.
And I think one thing about Malaysian investors is you can't go too far without Malaysian investors talking about property. And it's a little bit different for you and me because like you like stocks and I like crypto. What are your thoughts on property investing?
Okay, property investing, I think for the younger generation, with the internet, with digitization and stuff like that, we have so much more options than properties. So, for example, I have properties as well. I do rent them out for a positive cash flow, which is pretty important. Even with that positive returns I get from my property, it cannot really beat what I make in the stock market, in terms of just dividends. I'm not even talking about my capital gains. So, for example, right now the yield on my property probably 2-3%, including maintenance and everything. Easily I can make that amount in dividends if I invest in REITs. So that will make me 4-5% easily every year, and without the headache of managing the property, looking for tenants and stuff like that. So for me personally, properties, I wouldn't go that way. In the future, maybe a commercial one instead of a residential property. Yeah.
Right. It's interesting. Yeah, kind of my thoughts around property as well. But maybe it's because I'm lazy because
Yeah, it takes a lot of effort to maintain a property. I have it really close to my home. So the plan was, for me to commute up and down easily, but at the end of the day, I'm still a lazy person. I think we are all lazy persons, like inside.
Yeah, I think all of us. Cool. So more questions on investing. and this is more about rebalancing.
Mm.
How often do you evaluate performance and do that area of or that activity of rebalancing?
Okay, rebalancing. I look at individual stocks instead of rebalancing. So first is when the quarterlies come out or when they come out with the annual reports. So that's when I would take a look at the individual stock. And then if I like it, I like the way the management is, the direction they're going in, I would probably purchase more, provided the price is all right. And then that's when I do my rebalancing. If I don't like it, I would probably look to sell it.
Right. So I guess you can say it's more like a quarterly kind of,
Yeah, but
of
because of the
evaluation.
20 over stocks I have, so probably every month I would say
Mm-hmm.
a quarterly comes out, and then I would have to look at it.
Mm-hmm.
Yeah.
Okay, cool. All right. So let's finish off on this topic of investing.
Mm.
We've spoken a bit about some of the more, I would say, more intermediate levels of investing. There are people listening out there today who are very new to the concept of investing, very new to the concept of stocks. And what would you say are some guiding principles for them to get started?
To get started, okay, that's where I would point people to the blog that I have, because I've actually written articles on how to get started, but I don't do recommendations where I tell people what stocks to buy. So instead, you find articles like brokerage comparisons where they compare fees, what's right for them, and then I have articles like what type of investing there are, what type of securities there are to invest in. So it's not only about stocks, I'm actually sharing whatever I invest in. So what I do on the blog is share what I do, and then if that's what you think identifies with you, that's your kind of investing, that's your risk profile, and yeah, then you can just follow. And then, but at the end of the day, I always tell people to do your own due diligence, do your own research before following or before jumping into any securities.
Cool. And I've also read your blog. It's very interesting. And I would say that it's quite beginner friendly in the sense that
Mm.
it's not that it's very, very simple information, but it's written in a very simple and
Yeah.
easy to understand way.
Yeah.
So in my mind, I'm thinking if I'm new, I'm reading the blog, and then if I want a little bit more insight, I should go to your YouTube channel. Would that be
Yeah.
fair to say?
Yeah. If after reading the articles I have there, you decide that you are a certain kind of investor, then eventually the YouTube channel will have videos of me showing how I do things, how I value stocks, why I think a stock is good, why it's bad. So it's my thinking, my way of thinking, my process, how I do things. So if you feel that's how you do it as well, you can try to replicate it, think the way I do, value stocks the way I do. Yeah. To start off, read a lot, read the articles, go to YouTube. Not only my channel, I'm sure there are a lot of channels out there. US ones as well. Don't have to just go for local sources. And then after that, once you're familiar with everything, go ahead and open the brokerage account, because what's important is to actually start. So a lot of people come to me, they ask, I direct them to the blog, I direct them to articles, but they don't start. So they just ask, they read, and then they don't start. So Malaysians, I think, like to be spoon-fed a lot. Yeah, that's the most important things to start. Even if it's a small amount, start with 3K, buy a stock, see how it goes, see if it performs according to your research, according to how you see it perform in the future. And then if it's right, just replicate it, put in more money, and keep the ball rolling.
Yeah, I like to call that the concept of skin in the game, because
Yeah,
if you don't
yeah,
actually
exactly.
have money, then I think your motivation to learn and I guess grow also is not that high, because you kind of have it at arm's length.
Yeah,
And I used to do it.
demo accounts and all.
Yeah, not even demo accounts. In my university days, I I remember I would read all
Okay.
the articles in the world,
Mm.
like Casey Lau and
Mm.
MSN Money. I read so many articles, but I actually never tried to do it
Yep.
myself. And I think my own growth was pretty stunted. In terms of books, are there any books you would recommend someone who's new to check out?
Yeah, one good book, like the book that really got me started savings, and on the track to frugality, is called The Millionaire Next Door
Mm-hmm.
by Thomas J. Stanley.
Right.
Yeah, if I'm not mistaken. So that would be one of the books that shows you that millionaires are actually made from savings and frugality. So they are not. I'm sure there are that inherited their wealth, but
Mm-hmm.
a majority of them are self-made. So how are they self-made? They save. They have a budget. It takes discipline and hard work. So that got me on savings, and then for investing,
Mm-hmm.
I think the intelligent investor would be a good one to start with. It's
Okay.
not that basic, but it helps a lot lah, on how to do analysis and all.
Right. That's Benjamin Graham,
Yep,
the
Benjamin
intelligent
Graham.
investor. Right. Cool. Yeah, I think that's also Warren Buffett's
Yeah,
Sifu,
yeah.
right?
One of the
Okay. And is there any particular thing that you remember from either of these two books that it just sticks in your mind that you
uh,
just can't help share?
intelligent investor is a lot on analysis. So like I said, it wouldn't be so basic. It's a lot of numbers and theories on how to invest, how to value, how to buy low and then sell high eventually. Millionaire Next Door. Yep, like what I said lah. Basically, millionaires are not made like how you and I think. They
Mhm.
inherited or they started a tech company and then their wealth just grew from there. It actually starts from hard work. Most of them have families. Like their wives are at home. They are the ones that are saving a lot, doing the budget. Then the males are going out working and not spending a lot. Basically, yeah.
Right. Okay, that's a very powerful concept in
Mm.
itself. Yeah. Before we close off the topic of investing and move away to other
Mm.
life related stuff, I want to ask you about your own journey. If you could share a little bit more on your journey of investing, when exactly did you start investing in stocks? How old were you?
Like I said, I got interested through university. I
Mm-hmm.
think from the two courses, and then I actually started putting my own money in when I first began working. That would be 2014. 2014. Yeah. So I started there. If I recall, my first company is actually Sunway
Mm-hmm.
Group Berhad. I started off with less than 10k, I think. So probably 7 to 8,000. That was what I saved up. So ever since then, I started putting in more money. Whenever I save a certain amount, a good stock comes along, I would just throw money into the stock market.
Right. So you started 7 years ago. I guess you were 23 years old back then.
23 or 24.
Yeah.
Yep, I can't really.
Right. Which is, I mean, to me, it sounds pretty young. But let's say somebody watching today is already, say, late 20s, 28, 29. Is it too late to get started in stocks?
No, I wouldn't say that. But of course, the younger you are, the better it is. So, for parents out there, I think the best thing you could do for your children or teenage children that you could actually get them started on investing. Probably when they're 18, 19, teach them a little about stocks. Instead of giving them presents, use the money to buy them some stocks. I know it sounds weird, but that would be what I would do, for my future children. And if you are like me, 30 plus, and then late 20s, and you haven't started investing, it's not too late. You still can go into stocks or whatever assets that is you feel suitable for you. But for stocks, you would probably want to go less risky kind of stocks. So don't go so much for growth. Go for defensive, kind of more stable stocks. Yep.
Right. And when you say defensive, can you give some examples of what would be a defensive kind of industry or stock?
Traditionally, defensive would mean consumer, kind of products. Those stocks like Nestle, which produce a lot of the food you see in the supermarket, a lot of food you eat. For me, I would say defensive would be property, but not the property that you and I talk about. More on big properties like REITs. So REITs are actually called real estate investment trusts.
Mm-hmm.
They invest in huge properties. So there are several different REITs, retail, office, a lot of industrial, a lot of REITs. So if you buy into REITs, you get a small share of probably like Mid Valley. You get warehouses, big warehouses. So those are really strong assets to hold. So I wouldn't say they wouldn't go down in value, but rentals and all, you would get your 5-6% dividends. So those are defensive in my view.
Nice. Would it be fair to say that defensive stocks are those kind of companies that, whether rain or shine, whether depression or not, these are things that people still need? Is that how you define a defensive stock?
Yes, like during crisis,
Mm-hmm.
Stocks that produce stuff that people still need. So,
Yep.
Like I said, Nestle, food, people will still need to eat food, and it's not expensive food. It's like groceries, your everyday needs.
Right. All right. So moving on to a bit more of the not so much focused on the investment topic. This is a question from Chan Manman, and he or she is asking, how do you think your FIRE goal will change if you have kids in the future, or have you already counted that in your calculation?
The 36,000 I mentioned earlier, that is for me as an individual. So if I were to have a kid in the future, of course that amount would go up, and then I would hope I have a wife with me with the kids. So she would hopefully be working as well. So double income, and then from there the kid should be able, should be taken care of. Yeah.
Right.
So that 36,000 is for me personally. With a kid, with a wife, or with more kids, the number would definitely go up.
Right. And as far as I understand, you are more interested in the financial independence part. It's not like you plan to retire at 35 anyway.
Yeah, correct.
Most likely you'll still be working and having a source of income.
Yeah,
well.
Working with a peace of mind, so without having to worry about not loving my job, I could actually find a lower paying one, and then but enjoy what I do.
Awesome. And this is a question that Ziet invests, and a couple of other people have asked me as well. Can you share a little bit about your own source of income? Do you have a job? Do you work for someone, or are you self-employed? As much as you can share, of course.
Okay. I won't share too much, but I started off working at a 9 to 5 job, and then after several years of working there, I started a business. So yeah, I'm what you would call a businessman right now lah. So I own a business, and I'm working to build that business, and that's where all my income comes from.
Right. Okay. So Dividend Magic is another project on the side.
Yes, Dividend Magic is more on my investing, to record what I invest, and it isn't making a lot of money, but my main job is still my business right now. Yeah, Dividend Magic is a place where I go to write, to talk to like-minded people, and to record what I invest in.
Awesome. So this is a question from Yin Shan. I think it's a really interesting one. And he or she is asking, what mistakes have you made in your own investment journey, and how have you corrected them?
Mistakes. I think the most recent one, I wouldn't call it a mistake, more of a regret, would be glove stocks, which I
Mm-hmm.
didn't go into. I looked into it, I saw the potential, but I didn't realize that gloves would go up by so much. So when it went up 2 times, I thought, okay, this would be it. 4 times, okay, this would be it. I didn't go in, so that's one of the regrets I have. In terms of mistakes, uh, I would say the most common one when you're first starting out, when you first start to invest, is that you don't you buy on news, and then when you buy on news, normally if it's positive news, so you enter at a really high price, so that's when the market has already gone up. Going in, then you'll be trapped there, and then once it normalizes, once it goes down, you'll be trapped at the high. So that that was one of the mistakes I made. So yeah, when you first start out, do your research. Make sure that you don't just buy because people are telling you to buy. Buy into fundamentally sound companies and try to buy at a lower price. That's common sense.
Mm-hmm.
I know, but you just have to keep reminding yourself of that, because we sometimes can't help but be emotional when we invest, when we put money in the stocks.
It sounds like you are very much a fundamental investor. Would you say so, Lee?
Yeah. Yeah. My analysis are mostly fundamental. I would. I'm trying to learn some technical analysis, so to know when to go in, to know when to go out, that kind of thing.
Okay,
Yep.
yeah, because that's something that in the crypto world, technical analysis (TA) seems to be pretty big.
Yep.
So, any thoughts on how to find a good balance between fundamental and technical?
Um, I personally I go fundamental first, so I look at the fundamentals of the company, look at the numbers, and then try to predict, you know, moving forward what the company is gonna do, what are the risks involved and stuff. If and when I plan to buy or sell a company, I would then go into the technical part of it. So I'm still learning that part. Um, I'll be putting all this up in the YouTube channel, like how I do fundamental and then technical analysis. So yeah, fundamental first, then after making a decision, technical. Yeah, I'll try to learn more technical analysis. But the only technical analysis I would do is at the point where I want to buy or sell a stock.
Right. Okay. So perhaps not so much of the like charting to day
Yeah,
trade. I guess you're not a day
I
trader.
won't make a decision based on technical analysis. Yeah,
Okay.
I make a decision on fundamental and then see when to buy or sell through technical analysis.
Nice. I've noticed also that in your portfolio you have, I don't know if it's my perception, but in recent times you seem to have been focusing a lot on the US stock market.
Mm.
Is there any thinking behind that?
Yes. Okay. Why US stocks? It's because I feel that US stocks are more transparent. First thing, as you know, Malaysian stocks are susceptible to a lot of, I would say, behind the scenes kind of manipulation. You know, government or officials, or a lot of risk involved. So you may find a company that is amazing on paper, but there are risks involved, huge risks where a change in government suddenly would bring down the entire stock. So that's what I don't really like about Malaysian stocks.
I see.
And then for the US side as well, it's so much bigger. The market there is huge. Our biggest company in Malaysia is Maybank. So that Maybank is only a small, tiny company if you bring it to the US. So not only because of exchange rates or what, but the market cap of the companies there are huge. Like Apple, it's like $1 trillion, 2 trillion now, almost. Yeah.
Right. And I can't help asking this question with the recent presidential elections results of Joe Biden. Any thoughts on what might shift in the market over there?
I think whatever shift there is, there will be a short-term one because Biden or Trump, I think the stock market will go up either way.
Mm-hmm.
So the only thing I foresee is if Trump, makes a big hoo-ha about what's happening and then doesn't want to vacate, then we might see a short dip. But eventually, like in the long term, stocks will go up, especially the US stocks, the US market.
Right. So this is a question that I typically like to ask my guests as we move towards the end of the show.
Okay.
What are your thoughts on Bitcoin?
Bitcoin. I love them a lot right now. So I have actually, I think I mentioned earlier, probably 1%, maybe 2% in Bitcoin and Ethereum as well. So crypto has only recently been on my radar. Like we previously talked about it, I think a few years ago.
Yep.
That at a point I didn't really go into it. I bought, I think, a very small position only. So right now, recently, few weeks, maybe a month ago, is when I actually put in some money into.
And was there any specific point when it sort of made sense to you? Like, did you read a certain article or something and you were like, yeah, this makes sense. I should experiment a bit with crypto.
Yeah. Okay. Yeah. Crypto. I'm holding it as a store of value. Like, they call it digital gold right now for Bitcoin. So there was this article you actually shared with me on Paul Tudor Jones, where he actually bought a position in Bitcoin, and then a lot of other companies as well. But this was thankfully after I actually bought some Bitcoins. So after that, Square, the payment system company in US, actually bought, I think, 50 million Bitcoins. And
$50 million of Bitcoin.
15 million, $15 million of Bitcoins. Yeah, to hold as I think they called it, I don't know, it was for store of value as well, and then for investments in the future, I guess. And then PayPal, which is the big one, which they allowed usage of Bitcoin on their platform. So that was, I think, huge, right?
It's big news.
I regret not buying more, but I'm also glad that I bought into it at I would say the right time lah.
Okay.
And so looking forward to seeing it increase, but also maybe hoping for a short dip where I can actually put more money in. Yeah.
Right. Okay. So as we move towards the end of the show, can you tell us a little bit more about your YouTube channel again, Lee, and what's going to be exciting there?
Okay. YouTube channel, you can actually search for it. Just Dividend Magic, I think it will come up. A lot of it will be me and my friend doing valuation of individual stocks. I think that's gonna be interesting for a lot of people because we don't plan to just give like 10-20 minutes kind of snippets of information, but we are going deep into the valuation, our thought process, a lot of numbers, competition, the industries they're in, then moving forward, what we think about the stock. So hopefully it feels a niche sort of for Malaysian investors. We'll be doing a lot of Malaysian stocks, US stocks as well, for Malaysians to actually invest in the US market. So that would be the main point of the channel. We'll have general topics as well on personal finance and investing.
Yeah, I'm looking forward. And I think the personal finance / investing scene in Malaysia is pretty exciting over the past few years. More and more content.
Yeah, we started out, I think it was just me, you, and Suraya. I think the three of us.
Yeah, there was a few of us. And then there was like the OGs like Casey Lau.
I think, Casey Lau, I didn't get to meet him, unfortunately. Yeah. But we started off pretty quiet. We were just doing our own stuff, writing for a few readers. But I think it grew into a pretty nice community. I like what we have now.
Yeah, and it's a very supportive community. It doesn't seem to be like people are bashing each other, except for one or two weird people. But
but that's on the investing part. I don't think there's much to bash on, personal finance.
Mm-hmm.
Unless you just don't like someone that's saving money, then you bash him out. That's all. Yeah.
Yeah. All right. Thanks so much,
Yeah.
Lee, for being on the show today. The last one, I always save this one for last, is what's the pitch today? And the pitch is, what's the one thing that you want everyone or anyone listening to today's show to do after this?
Yeah, I would want everyone to save. I think you would need your savings. Like, for example, the recent pandemic has caused a lot of people to not be able to pay their loans, pay their housing loans, car loans, whatever it is. So with savings comes security. Savings help in a lot of way, in the sense that you don't have to liquidate your current assets, because when you actually need savings, when a crisis comes, the market will most likely be down as well. So you're going to sell at a loss. You don't want to touch that. So that's where savings come in. That's where it's important. And then with savings, you can also capitalize on, for example, pandemics like this. It's a huge opportunity to buy into stocks or whatever other assets, houses, which is definitely going down right now. So save, and after that, invest, of course. But choose what you invest in, then decide after you do your own due diligence.
Awesome. Thank you so much for being on the show
Thank
today,
you.
Lee.
Thank you.
And
thanks for having me.
yeah.
Thank
Thanks,
you,
everyone.
See you.
Bye.